Welcome to the bullpen. It's our monthly conversation about the markets featuring Tommy Grisafi from Advanced Trading, of course, based at Mayville, North Dakota. Tommy, as we take a look into this past month, we've wrapped up harvest. We had a beautiful fall for the most part. What's your take as we look back on the past month?
November, Don, was an interesting month. It felt like a month when we went through Thanksgiving, a blessed holiday up here to actually have the bushels. From when you and I went on the boots on the ground crop tour, I think that was at the end of May or the beginning of June. Things were not looking so good up here. There was a lot of Hail Marys thrown up, and you know what? Someone was down there at the end of the end zone and caught the ball, and we won. And that's really awesome because, as you know, we're in the bushel business, and we do have the bushels here, or we have the tons and the sugar content to our friends over at Crystal. So a lot of things lined up right now. There's some headwinds here that are scaring the heck out of me. Let's talk about 2023, what we're going into. There's not a lot to talk about with markets because markets were kind of a very sleepy month in November. Of course, as anyone knowing, wheat's really come down a lot, but corn and beans held their own. But what's so scary and what farmers are starting to think about once it gets cold and the snowflakes fly like they are today is let's think about 2023. Record high cost production, record high cost production inputs, and the price of the crop starting to come down. But wait, there's one more thing that's going up really high and really fast: interest rates. If there was one thing I talk to farmers and clients a lot about is financially, do you realize how much money it's going to require to operate your business the next few years and what the cost of money is? And how does that pertain to the bushel? Should you store the bushel? Should you sell the bushel at harvest and get that money and pay down debt? And every farmer has a different situation. Someone always says, "Oh, you should sell because it's at your cost of production." Every farmer and every farm family has a different cost of production based on how much land they own, how productive that land is, what type of equipment they have, etc. To really turn it to more of a financial piece, we are confident we're going to have a record high cost of production in the interest rates that are the highest they've been in 30 years. And now flip it into December, the price of the commodities across the world are actually starting to come down. So when you look at how much wheat's dropped, you're like, oh, wheat's really cheap. But wheat's even cheaper in Russia. And you know what? I don't think Russia feels one bit bad about flooding the market with cheap wheat. And we went from we're running out of wheat and India doing a ban to it doesn't look like the world's running out of anything all of a sudden. Take crude oil. Look what crude oil did the last few days. We're right down to what we call the Biden support level, $75 energy. So you're seeing interest rates high, you're seeing inflation calm down, and it's interesting. I'm going to flip you back a question.
What's that?
You've been out a lot more than I have. I've been spending my time behind my desk. How are the attitude of the farmers and the when you go to a trade show, or you and I will go to a trade show tomorrow? Do you think there'll be a positive vibe out there?
I think we're still positive when we take a look at the bushels that you talked about. I think there's two things. You talk about the interest rates, recession, some of those concerns that are out there, financing. Uh, I'm hearing a lot of concern about drought. We are
Hmm.
turned
Great
off the
point.
rain faucet at the end of June, early July, and really, except for maybe a little bit here right before we froze up, it's very dry across the region, and it's not just in our backyard. It's
Hmm.
a very widespread situation.
Don, you did great with that question. Can I throw you another one?
What's
Just
that?
kidding. I'm just kidding. Thank you. I enjoyed being a partner with you the last year. I enjoy what you do, and I just enjoy working with you. So I want to put that out there. Keep asking me questions. I'll do my best not to be sarcastic. I just ate a little bit of a donut from Soul Hope Bakery before we started this, and I think I'm on like a little kid sugar high. Throw me a question.
You're all fired up. We saw the Wall Street Journal come out with a headline on Monday talking about 5% interest rate is where the Fed's going to settle in, where I think a lot of folks are thinking maybe 4.5%. That certainly uh, drove this Wall Street, drove down everything else down to start this week.
Yeah, and there was yes, and we have interest rates. This is how the world used to work. I don't know what your interest was on the first home or condo or townhome you bought, but it wasn't 3%. I guarantee you that. And so, you know, you're 60, I'm 50. There's a whole group of people I've never really seen high interest rates. I think I've seen mortgage rates on homes 6, 7% in the late 90s before 2000 happened. But we've had this effect from it goes all the way back from when 9/11 happened. If you remember when 9/11 happened, our government wanted George Bush and that presidency wanted people to feel better. They actually cut us checks, if I remember right, for $300, and they lowered interest rates to put money in the system. And so this cheap money interest rate policy goes all the way back to what the events that happened on 9/11 over 21 years ago. So there's a whole 3, 4 generations who are like, what do you mean it's 8% to buy a home? What do you mean I can't buy that $2,000 a month to only pay for this much, not this much home? And when you put it in perspective to farming and agriculture, again, we have to pound this through. We're going to go into a record high cost production with 30, 40-year high interest rates into a commodity market that's depreciating. Store and ignore might not work as well as it's worked in the years past. And farmers all across the world are also trying to grow and raise commodities at record profits. And it's a very uh, dangerous situation. As a trader, I've had days where I felt so great, like I was so smart, and I've had days where I'm like, I don't know if I could have done a worse job. And agriculture does that too, but it's even harder in agriculture because you have to deal with Mother Nature. So what you just talked about with that drought monitor map that'll come out on Thursday every week, that drought monitor map is lit up with all types of colors. There's not a lot of white on that screen. All types of yellows, oranges. You get into some reds. That could be a real interesting situation. But notice one thing we're not talking about. Remember when we used to be like, oh, fertilizer prices did this. When fertilizer prices or prices in general go up, everyone talks about it. But when prices come back and contract, everyone just kind of gets quiet about it. And so fertilizer prices have come down quite a bit. And just in the last few days, December 23 corn has closed below $6 for the last 2 or 3 days. I think Friday, Monday, and now Tuesday, December 23 below $6. So we're getting out of this call it euphoria period where it's my right to sell high prices. That's not going to be like that for much longer. I think you will see tough times again work its way into agriculture in the next few years.
Tommy, we've talked about it in the past about the importance of having that local market. We had an announcement here in Grand Forks that Epitome Energy is going to build a soy crush plant. This is the one that had been talked about in Crookston. Of course, we've got 2 other plants in progress in North Dakota at Castleton and Spiritwood. That's got to impact this basis as we start crushing those beans.
Well, I can say with a smile on my face that North Dakota and Minnesota are no longer the armpit of the world when it comes to cash markets for several reasons. We've had some light crops the last few years, and we've had unbelievable demand. So we haven't always produced the bushels, going all the way back to several years of too wet a spring or damaged bushels in the snowfall of the fall before where all the bushels couldn't be harvested. And now when you take it like internal demand, local when your end user isn't China. So when your grain doesn't have to go all the way from your farm to Alton Terminal to a train to the P&W, when you could take your grain, give Joe from Warren, Minnesota a shout out. When you could be farming in Warren, Minnesota, and you know our friend Joe, and you could be farming in Warren, Minnesota, and bring allegedly these soybeans right down to that crushing plant, you've changed the dynamics of agriculture in North Dakota, Minnesota. It's a fun place to be right now. Let's hope the hits keep coming.
At the same time, the state of North Dakota announcing an economic analysis about agriculture in the state, and the one thing that really came out loud and clear is the need for animal agriculture.
That is an interesting subject, and we could do hour-long shows, podcasts, YouTubes about it. And there's all types of discussions. I guess let's just put it out there. Let's not sugarcoat it. Everyone knows we need animal agriculture, just no one wants it by them. I don't know how to say it any nicer. And we have a great thing up here, but what what it looks like when you drive along 29 in North Dakota and what it looks like when you drive along 29 in South Dakota, it there's a big difference when it comes to animal agriculture from North Dakota to South Dakota. Wouldn't you agree, Don?
Yeah, definitely. Particularly that dairy corridor. We've got on I-29 in South Dakota and certainly we raise a lot of pigs and poultry in the neighboring states as well. We've got a supply demand report out at the end of the week. This one really more the demand picture, right? We want to get a lot out of this, the December numbers.
Yeah, but markets are thinner, and there could be a surprise in there one way or the other. Professional traders and risk takers are taking the next few weeks off, and these reports at these levels, when we're dealing with $14 beans, $6 corn, $7, $8, and $9 wheat, depending if you're trading border trade, Kansas City or Minneapolis. These are still lofty levels, and we could be dynamic. So don't let your guard down when it comes to risk management.
Anything else these guys need to have top of mind as they go to the end of the year and turn the page into 2023?
Well, if you're watching this, you made it another year. Congratulations. Agriculture's a wonderful place to be in, and we're so blessed to be up here in North Dakota, Minnesota area, and we'll give a shout out to our friends up in Canada.
No doubt. Tommy, likewise, I appreciate the opportunity to work with you, partner with you on these projects always.
Thank you, Don. It's my pleasure.
Thank you for joining us for our monthly update on the market news with Tommy Grisafi from Advanced Trading, of course, based at Mayville, North Dakota. Until our next edition of The Bullpen, I'm Don Wick on the Red River Farm Network.